Hey guys, Spencer Coffman here with the Internet Hustler YouTube channel. Today we're talking about savings bond investing. Hello everyone, welcome to the Internet Hustler YouTube channel. Today we are talking about savings bond investing. Now, savings bonds are a very safe investment. Basically, they're very easy to purchase and to invest in, to use. You do have to be a certain age. That has changed. Usually it's 18. You can buy them younger if you have an adult be on the bond with you. So let's start out with, what is a savings bond? Well, a savings bond is basically a piece of paper that you get from the federal government. It comes from the United States Treasury, and it's basically a contract. You give them, let's just say $50 of your money today. They agree to take that money and they'll use it for whatever the government wants to use it for. And then you receive a piece of paper that says, hey, in 10 years, your 50 will be 100, or in 20 years, or whatever the timeline is based on the type of bond and the interest rate that that bond offers. And so you'll give them 50 and they'll give you a piece of paper that says $100. And basically what that means is you can take that piece of paper to a bank or any place, a federal location that cashes savings bonds. You will be able to give them that piece of paper, and then they will give you the number on that piece of paper. Now, of course, if you, let's say, buy the savings bond 1 year and 5 years later you bring it in, they'll look up that bond and say this bond hasn't matured, so it might only be worth $60. And you can either wait and hold on to that until it matures and reaches 100, or sometimes they can go over, or you can cash it in right now if you need the 60. And so savings bond, that's what a savings bond is. It is an agreement where you are loaning the government money and they are paying you a return over a time period. And so how do you know which savings bonds to buy? Well, you need to do your research. There'll be a link in the description below that's going to take you directly to the Treasury website about savings bonds. You can look at all the different types. They have Series I, Series E, Series II, I think they even have EE. So there are different series of bonds that you can get. Now, which one is the best? Well, that would be whichever one pays the most interest. Some people say that I or E or are more secure or are better returns. Basically, that doesn't even matter. None of that matters. What matters is the best interest rate. Now, typically, bonds pay anywhere from hopefully 1% to about 3% interest. Now, in my opinion, savings bonds are really not that great of an investment because 1 to 3% interest is horrible. Yes, it's way better than the 0.5% or the 0.1% that a money market savings account is going to get you, or maybe even CDs, certificates of deposit. We'll talk about them in another video, so check that out in a card up here. CDs, they often only get you 0.5% or maybe even 1%. Like anything, all of these rates fluctuate based on what the Fed does, the Federal Reserve. Banks and the lending programs, what they do, these rates change. And so you need to look up, if you want to invest in savings bonds, you need to look up the current interest rates, the different series, and know which one you want to buy. Sometimes buying a $20 bond or a $50 bond might be better than a $100 bond. So you keep that in mind too. The amounts could vary. Or maybe if you say you want to invest $1,000, maybe you need to be buying $500 bonds or $250 bonds. So keep in mind there are a lot of different options. Another thing you can do is purchasing them electronically. So you could invest in bond funds or treasury yield funds, and you could do that through mutual funds or exchange traded funds. We have a video about mutual fund investing that you can check out in a card up here. You can invest in anything through those types of funds, and the treasury yields are ETFs or mutual funds. You could grab them in a mutual fund and you wouldn't have to hold the paper bond that you need to go back with and redeem from the bank, because if you lose that piece of paper, you lose your money. It's essentially like a bill. When you give them your 50 and they give you that $100 certificate, that is $100 cash that is like, do not open until the year whatever. And when you open it, you can take that in and they will give you your money. Of course, you have to pay tax on those returns, which is another way they get you. But that is, in a nutshell, what savings bonds are. So if you have any questions, please comment below. A quick recap: it's a loan to the government. You're giving them money, they're giving you a piece of paper. Years later, you can take that piece of paper back in and redeem it. The interest rate will vary depending on the amount of bond, the dollar value, or the series of bonds. So check out that, but do your research before you go buy a bond. You can also invest in the Treasury itself through mutual funds or other traded funds electronically. So whether you do it on paper asset, like a physical piece of paper, or paper trading, like paper assets, they call all of these stocks and bonds and mutual funds paper assets. But whether you do it in a fund electronically or whether you have a hard copy is up to you. If you're going to be buying them as presents for people, then I would get the hard copy and just make sure it's kept in a safe place. Again, if you have any questions, please comment below. I hope you liked this video and subscribe to the channel. And if you do, could you please comment below saying that, hey, I liked the video or I subscribed to your channel. That would be great. Until next time.